So, you know that specific kind of anxiety dream, the one where you're in a big meeting, maybe a boardroom, the stakes are super high, you've done all the prep, you know your stuff inside and out.
Yeah, I think I know where this is going.
And then the client asks one very specific question.
Yeah.
And you confidently answer a completely different one.
Oh, the right answer to the wrong question. Nightmare. It's awful. And you can see it on their faces while you're still talking. You realize you've just completely missed the point.
It's excruciating. And it happens more than we'd like to admit. But today, we're actually going to look at a document that is, it's basically a forensic autopsy of that exact failure.
It's a really fascinating document. We're going to be dissecting the examiner's report for the Advanced Performance Management exam. This is from the December 2025 session.
And before you tune out, because you heard the word exam, let's just be really clear. This is not a study guide. This report is, it's a diagnostic tool. It shows how really high-functioning, nearly qualified professionals fail to communicate actual value.
Absolutely. The candidates taking this exam, they're advanced. They know the theories, they know the textbook definitions, but the report just paints this picture of smart people really struggling with, I'd say, 3 critical things. 1, doing basic math under pressure. 2, resisting that urge to just, dump all the knowledge they have. And 3, the big one connecting operational actions to the bottom line.
That last one, commercial acumen, that feels like it's going to be a huge theme today. We've got 3 case studies pulled from the report.
Yep. A paint manufacturer, a car maker, and a law firm. Each one exposes a slightly different flaw in how we think and communicate when the pressure's on.
Let's get into it.
Here.
First up, case study 1, needy manufacturing.
Right, needy. So they make paint. They're based in a country called Zealand, and it's a classic business distress scenario. You've got foreign competition coming in, margins are getting squeezed, the board is, panicking.
So the candidates are asked to do some number crunching first. And honestly, reading the examiner's feedback here, it's a bit alarming. The performance on basic calculations was described as disappointing.
That's putting it very politely. The examiner pointed out this widespread failure to calculate return on capital employed, or ROCE, correctly.
Which is wild because ROCE is, it's the North Star metric for a manufacturing company. Everyone should know that formula.
They should. It's operating profit divided by capital employed. But they were going wrong in the details. The report says people were just grabbing the net assets figure from the balance sheet.
Instead of actually calculating capital employed.
Exactly. Or they were using the year-end figures when they should have used an average of the opening and closing balances. Little things that completely change the answer.
It sounds like a lack of attention to detail, but maybe also just grabbing the easiest number you see on the page.
That's exactly it. It's cognitive efficiency gone wrong. Your brain just wants the path of least resistance. But the one that really shocked me was the dividend per share calculation.
Oh, I saw that. The scenario literally gave them the total dividend paid and the total number of shares.
Right. It's a division problem. Total cash out divided by the share count. And yet, the report says, and I'm quoting here, worryingly, several candidates were unable to calculate dividend per share.
These are advanced candidates.
Yeah.
What does that tell us about performance in the real world?
It tells us that when people switch into what they think of as strategic mode, they just abandon their foundational mechanics. They think, oh, I'm here to talk big picture. I don't need to double check my arithmetic.
It's that Van Halen-Brown M&Ms theory. If you get the small stuff wrong, I can't trust you with the big stuff. If you can't divide 2 numbers, I don't trust your market analysis.
Precisely. Your credibility just evaporates. But the math wasn't even the biggest trap in the needy case. There was a bigger conceptual failure. I call it the CEO complex.
This was in the section on their reporting system, right?
Yeah. The instruction was so specific. Evaluate the report. Does this document give the board the information it needs? Is it cluttered? Is it missing key trends?
But that's not what the candidates did.
No. Instead of critiquing the dashboard, they tried to drive the car. They started giving strategic advice on how to fix the entire business, You should cut your marketing spend, or you need to launch a new product.
I have seen this happen so many times. The client asks, is this the right data? And the consultant comes back with a whole new corporate strategy. Why do we do that?
Because fixing the business feels more valuable. It feels more senior. Critiquing a report feels, administrative. But the client, or in this case, the examiner, they didn't ask for a strategy. They asked if their tools were working.
It's a failure to listen. And it connects directly to the balanced scorecard part as well.
It really does. The whole what gets measured gets done idea. The prompt asked candidates to evaluate the existing measures in the scorecard, and it explicitly said, it might as well have been in bold flashing lights, do not suggest new measures.
Yeah, I guess.
They suggested new measures, loads of them. Oh, you need to measure customer loyalty. Why aren't you measuring employee turnover?
It's like helpfulness as a pathology. You want to show how smart and creative you are, but in doing so, you just prove you can't follow a simple constraint.
And in an advisory role, that can be fatal. If a client says, we have zero budget for new data, tell me what to do with what we've got, and you come back with a massive new project, you haven't been helpful. You've just been tone deaf.
Okay, so the lessons from Needy are pretty clear. Do the basic math, respect the constraints, and answer the actual question you were asked.
That's the summary, which brings us neatly to case study 2, Ascent.
Ascent. Right. The car manufacturer in Sealand, a different fake country, they're trying to boost profits using Kaizen costing and robotics.
Yeah, and this case is a masterclass in what I call the so what problem. Let's start with Kaizen.
Continuous improvement. Small, incremental changes. Standard stuff.
Right. And the question was about the impact of Kaizen on the performance management system. How does it change how you track costs or how you structure bonuses?
But the report says this section was done pretty badly.
It was, because of the knowledge dump. Candidates just saw the word Kaizen and, they panicked. They just dumped a textbook definition. Kaizen is a Japanese philosophy focused on.
We've all done it. You see a keyword, you write everything you know about it because you're scared of the blank page.
Exactly. But nobody in the professional world pays you to define terms. They pay you to apply them. And the examiner noted that people totally ignored the context. For instance, the prompt mentioned political instability in the country.
And what do they do with that?
Some candidates just spent paragraphs complaining about the politics, which had nothing to do with the costing system, and they missed a huge detail about quality circles, too.
Yeah, the groups of workers who identify problems.
Yes, the requirements specifically mention them. And very few candidates even brought them up. This is where that skepticism mark was lost. A good advisor would look at that and ask, hang on, is the staff actually going to do this? Do we have the right culture? Will the unions accept it?
Right. A definition of Kaizen is worthless. But an assessment that says your staff turnover is too high to make quality circles work, that is a strategic insight.
That's it. One is knowledge, the other is wisdom. But the biggest gap, and maybe the most important lesson in this whole deep dive, came from the robots.
The robotic manufacturing part. The CFO lists benefits, more throughput, better quality, improved safety, and so on. The candidates had to assess the profit implications.
Profit implications. That is the magic phrase.
And instead, they wrote things like, robots improve safety, which is good because fewer people get hurt.
Which is true. It's morally a good thing. But commercially, it's an incomplete thought. It doesn't answer the profit part of the question.
So walk us through what a commercially acute answer looks like for that, because I think this is where a lot of people fall down.
Okay, so you take improved safety. You can't just stop at fewer injuries. You have to build the bridge, you say. Improved safety means fewer accidents. This reduces the direct cost of compensation claims. It also likely lowers our insurance premiums.
Okay.
Furthermore, fewer accidents means fewer emergency production stoppages, which protects our uptime and therefore our revenue.
You're tracing it all the way to the profit and loss statement.
Every single time. Take another one. Higher customer satisfaction. Candidate said, customers will be happier. So what? A happy customer doesn't just appear on a balance sheet.
Not until they buy more things.
Exactly. The commercial answer is, higher satisfaction leads to more repeat business and good word of mouth, which lowers our customer acquisition cost. It might also make them less price sensitive, allowing us to protect our margins.
It's the difference between an operational benefit and a financial outcome. And it sounds like that gap is a huge problem.
It is the biggest hurdle for people moving from middle management to leadership. You have to learn to translate engineering speak, or HR speak, into the language of the shareholder.
And that disconnect popped up again in the final case, didn't it? Barscope Legal Services.
It did. The patent law firm. This one was about the building block model and technology.
The building block model part actually went okay from what I read.
Yeah, people were pretty systematic. They checked the firm's report against the model's dimensions, competitiveness, quality, flexibility, all that. The best answers even pointed out that the report itself was unbalanced.
Too focused on financials.
Which is a great insight. That's evaluation. It shows they were really engaging with the material. But then we got to the technology section, the great cloud computing confusion.
Okay, this part of the report honestly made me laugh, and then it made me a little bit worried. The task was to explain cloud computing and its financial advantages.
And a significant minority of candidates confuse cloud computing with artificial intelligence.
Wait, they thought the cloud was AI.
They used the terms completely interchangeably. They were writing about machine learning and algorithms when the question was about data storage and remote access.
I mean, we are drowning in buzzwords. Cloud, AI, big data. I can almost see how they blur together if you're not careful.
But that lack of literacy is so dangerous. If you're advising a client on a huge tech investment and you don't know the difference between where the data lives, which is the cloud, and what processes the data, which is AI, you have zero credibility.
It's like a chef confusing the refrigerator with the oven.
Perfect analogy. And even the ones who knew what the cloud was, they still missed the financial point, right?
They did. They talked about convenience. It's easier for lawyers to log in from home. That's an operational benefit. The financial advantage is the shift in cost structure.
From CapEx to OpEx.
Exactly. You don't have to buy a $50,000 server room anymore. That's a capital expenditure. Instead, you pay a monthly subscription, an operating expenditure. You shift the risk of maintenance to the provider. You align your costs with your usage. That is the financial argument a CFO needs to hear.
Precisely. If you just say, lawyers can access files on the train, you're answering like an employee, not a consultant.
So, if we step back and look at all three of these cases, Needy, Ascent, Barscope, what's the one big red thread connecting all these failures?
I think the synthesis is this. The failure didn't come from a lack of knowledge. These people had studied. They knew the definitions. The failure came from a lack of situational application.
They were answering the exam they studied for, not the one that was actually in front of them.
That's it in a nutshell. We see a keyword like balanced scorecard, and we just vomit out our pre-prepared notes, totally ignoring the bold text that says don't suggest new measures. We see robots, and we list your benefits, ignoring the prompt's specific call for profit implications.
It's almost like a failure of empathy. Empathy for the person who's asking the question. What do they actually need to know?
That's a great way of putting it. Those professional skills the examiner was looking for, analysis, skepticism, commercial acumen, they're really just different measures of professional empathy. Can you put yourself in the board's shoes? The board doesn't care that robots are cool. They care about net margin.
And they don't care that you can define Kaizen. They care if the staff is going to revolt if they try to implement it.
Exactly. The so what factor. That is the one thing I hope people take away from this. Every single time you make a point, just ask yourself, so what? Why does this matter to the P&L? If you stop at, it's more efficient, you haven't finished the thought.
It's funny, we think of something like advanced performance management as being about complex models, but this report suggests it's really about communication, precision, and just basic business logic.
100%. You can hire a computer to calculate ROCE, though apparently you still need to check its inputs. But you can't, not yet anyway, hire a computer to understand the nuance of why that ROCE number matters to a specific CEO in a crisis in Zealand. That's the human value add.
So for everyone listening, here's the challenge. The next time you're writing a report or putting a slide deck together or even just drafting an important email, look at it through the eyes of this examiner.
Ask yourself 3 things. 1, did I answer the specific question I was asked? 2, is my basic math completely bulletproof? And 3, have I explained the financial impact or did I just list a bunch of features?
And maybe number 4. Do I actually know what this buzzword I'm using means?
Yes. Please, just stop calling everything AI. It's okay to just say software.
Before we wrap, I just want to leave our listeners with one final thought. It's easy to sit here and critique these anonymous candidates, but isn't this exact thing happening every day in our own work?
It is. In a world of total information overload, the most valuable skill isn't having the answer. It's truly understanding the question. If these advanced candidates are confusing the cloud with AI, where might you be doing the same thing?
That is a very provocative thought. Are we just knowledge dumping in our own weekly updates? Are we just listing tasks we did instead of the value we actually created?
It is absolutely worth an audit. Go look at your last status update email. Did you tell your boss what you did, or did you tell them why it mattered to the business? If it's just a list of activities, you're making the needy mistake. You're giving them data, not insight.
Ouch. I have a feeling a few of us might be rewriting some emails this afternoon.
Better to rewrite it now than to have it end up in a report like this one.
True. Well, that's all for this deep dive into the gap between knowing something and applying it. Thanks for listening, and we'll catch you on the next one.